The shift to green energy is in full swing, but oil and gas still has a role to play. Barron has assembled a panel of top energy investment experts to break down the industry and look at ways to invest in both traditional fossil fuels and renewable alternatives. It's the Barron's cover story this week. And so, you guys, it's interesting. Oil, renewables, where do they fit in together? Should you invest in one, the other, both? Ben, let's start with you. What's the big picture for the oil business these days?
Well, right now, things are doing pretty decently. I mean, you look at oil prices, they're just under $80 a barrel, and they're probably going to stay around there with the floor maybe at 75, just because you don't have a ton of production. U.S. is at record levels, but it's not going to be going much higher. You have Russia, which is surprisingly pulling back on production, and Saudi Arabia has been very good about keeping OPEC in line with not overproducing. And as long as that's going on, you're going into a time when demand is going to be higher. It's summertime. People are driving in the U.S. And there's one of our participants actually thought there's a 25% chance that oil prices could go to $100. So right now, it's looking pretty decent.
Yeah, but what about all the geopolitics and wars out there?
Well, I didn't mention that. And it's because it's not having much of an influence right now. It's partially because this is not the 1970s. The U.S. is pretty much energy self-sufficient at this point, and all of Russia's oil, which is not coming here, is going to Asia, and it doesn't really need to go through these channels that it did before. And in regards to Iran, it needs to be able to export its oil too, so it's not going to do anything to jeopardize that. And so for now, geopolitics really is not priced into oil at all, the panelists say, and let's hope it stays that way.
Andrew, what about stocks? I mean, how do you play oil and gas?
Well, I mean, the energy stocks have actually been doing pretty well this year. The XLE, which is the leading ETF, is up about 15%, which is actually topping the market. Many of the oil stocks are at or near new highs, so there are no real bargains to be had. But if you want to invest in energy, I mean, I would consider the super majors, which are Exxon, Chevron, Shell, and BP over in Europe. I mean, Exxon, which is the industry leader, just got a overweight rating, a new rating from the Morgan Stanley analyst of the week, Devin McDermott. He sees the stock going to about 145 from around 120 where it is right now. He sees rising cash flow and free and earnings in the coming years. Chevron's been somewhat out of favor recently, partly because this Hess deal of theirs that they're trying to do has gotten hung up. But it's trading with about a 4% dividend yield and a pretty reasonable valuation. The European majors are super cheap right now. Shell and BP around 8 times earnings, 4% dividend yields, while the U.S. majors trade a good deal higher. Part of that has to do with the fact that they're under a lot of pressure in Europe from environmental activists, and a lot of European investors don't want to own it. But there could be some catalysts ahead for them. You could see a potential merger of the two companies, redomiciling, and some other positive developments for those companies right now.
Yeah, is there an AI play here even?
Yeah, I mean, you're seeing, I mean, AI is, I think, maybe helping the gas stocks right now because gas is used a lot for electricity production, and you're seeing basically increased demand for electricity, at least the hope for it. Plus, you've got LNG supply, which will be ramping up in this country. So you're seeing stocks like EQT and Chesapeake, which are big gas producers, have been doing better. The natural gas markets, which had been weak, is actually showing signs of life. And you're seeing in the utility sector, the independent power producers like Constellation, which has the biggest fleet of nuclear power plants in the country, have been on fire because basically companies are looking to basically, get scarce power.
Right. Megan, renewables. They used to be a thing. Now not so much. What's going on there? Are there still places to play there?
I'm going to push back and say renewables are not a thing. I mean, energy demand growth, is certainly up 2%, and AI has something to do with that for sure in those data centers. There's actually been a significant shift in the U.S. power generation away from coal and to renewables. And this is not just a young person talking about green energy here. I mean, this shift is actually, in the process of potentially tripling solar power in the U.S. by 2030, and that isn't priced into most stocks at the moment.
Yeah, well, let's talk about stocks and investments in this sector.
So this sector is volatile, and you really do have to be careful and play with a little bit of nuance here. But our panelists are actually pretty bullish on that solar installer that we keep hearing about and developer Sunrun. Lucas White actually did mention, he's a portfolio over at GMO, that he really likes solar manufacturer First Solar. He likes Solar Edge, and of course in that biofuel space that we were just talking about, Darling Ingredients and Nest are actually some of those companies that he thinks are actually pretty high quality with some competitive edges there. Now, of course, you don't just want to pick one player here. As I said, pretty volatile. So you do need to pick a basket of stocks. I mean, an iShares Global Clean Energy ETF might be the way to go.
Yeah, absolutely. Probably need some diversity, although you might be diversifying. That's what always happens with me when I look to do these things.